Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW S008 traders. And our website is www.stochastic-macd.com. For Elliott Wave Trading, www.24elliottwaves.com. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW SYS008 traders. The title of this video is how to combine the moving average 200 and the wave principle. Moving average 200 and wave principle. All right. The thick blue line that we have here on this monthly chart is the moving average, the simple moving average 200. Okay. All right. So the strategy is very simple. So we have, for instance, if we have an impulsive move, okay. If you want to know more about Elliott wave and the impulsive wave, go to www.youtube.com/user/24elliottwaves or directly go to our website 24elliottwaves.com, either our YouTube channel or our website 24elliottwaves. All right. So after an impulsive move, we have a correction. For Elliott wave traders, when we are talking about a corrective wave, we are talking about a wave with an internal wave, okay, with three subwaves. When we are talking about corrective waves, we are talking about okay, a wave with three subwaves. Generally speaking, when we say free, we count three waves. In the language of Elliott wave traders, after an impulsive wave, we are talking about correction. So I want to refer traders back to the video the videos about our zigzag trading. Check our website, check our YouTube channel, zigzag pattern, flat corrections. Okay, these are corrective waves after we have an impulsive wave. But in this video, we want to combine the moving average 200 and the wave principle. So after an impulsive move, we have what? A corrective wave. Yes or no? So this strategy is very simple. We have an impulsive wave followed by a corrective wave. But where the corrective wave is ending somewhere near the moving average 200. This is what we are talking about. We can use this setup for day trading, for swing trading, and also for investment. So for instance, suppose we have here, pay attention, an impulsive wave, okay, from A to B. Now we have a corrective wave that has been divided into three waves, something like this. A zigzag, 1, 2, 3, bringing the price down on or near the moving average 200. This is a bullish setup. We use the trading drill, the setup, the signal, and the low risk entry point to participate in this trade. On the other hand, suppose we have an impulsive wave in a downtrend followed by a corrective wave. Very often after an impulsive wave, we have a corrective wave. This is the wave principle. So we have a corrective wave after an impulsive wave in a downtrend, and the corrective wave has brought the price on or near the moving average 200. This is the moving average 200 here that I'm drawing here. This is a bearish setup. We use the trading drill and the trading triangle to participate in the market. The setup, the signal, and the low risk entry point. One will always check the fundamental, talking about the trading triangle, the economy news, the fundamental, the balance sheet, the cash flow. This is what we call the financials, balance sheet, cash flow, financials. Do the Google Asset test, check the management, check the cash flow, check the market itself, talking about the trading triangle, the market first, the sector, before the individual financial instrument, the heart of the trading triangle, the market leaders, the economy news, and the fundamentals. We want to combine the technical and the fundamentals. This is how the hedge funds are making their decisions. They are not using the technical alone. That's crazy. All right? So now, price retested here. This is a bearish setup. So you get a picture now. Okay? So you can see here we are looking at the S&P 500. We can see that it was an impulsive move, quite extended trend from here, okay, all the way up here. Now the price is pulling back. Now I don't want to go into the detail of wave counts. If you want to know about wave count, go to our YouTube channel or our website. Don't want to go into the wave count of this. You can see that the price pulled back near the moving average 200. For traders that are using the wave principle, they will analyze the internal waves, okay, of this pullback. All right. Sometimes you will see a pattern like this, which means a pattern may be formed, but the pattern is not yet completed at the time when the price is retesting the moving average 200. What do I mean by that? Let me explain myself. So remember, we have an impulsive move. An impulsive move will be followed by a corrective move. For traders to understand the zigzag pattern, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. Traders who understand the flat correction, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. All right? You want to understand the corrective wave. Very, very important. It's easy to recognize, okay, an impulsive wave. During the impulsive wave, the wave should not overlap. But sometimes you have something funny that looks like an impulsive wave. So the price will come down in 5, okay, mono wave or 5 subwave. But this time, because it's a corrective wave, you will see that the waves are overlapping, violating the wave principle relating to the impulsive wave. So the price will come down like this. 1, 2, 3, 4, 5. And you may say to me, Joel, you said that when we're talking about correction, it's 3 waves. But when we are talking about zigzag pattern, it's 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. That's a corrective wave. The zigzag pattern is a corrective wave. So you will see the first part of the zigzag pattern. So we have an impulsive wave. And then you see 1, 2, 3, 4, 5 overlapping waves, retesting the moving average 200. You will buy. You will look for opportunity to buy. But in your mind, because you are an earlier wave practitioner, you understand that the correction is not finished. As everybody is saying that a bullish cycle has begun, you know that no bullish cycle has started at all. In fact, it's a part of a correction. So you buy the second part of the zigzag pattern, which we will expect to be 1, 2, 3. But remember, we are combining the moving average 200 and the wave principle. So apart from the wave pattern, we are using the moving average 200. So come down 1, 2, 3, 4, 5, retest the moving average 200, or come on or near. Repeat, sometimes you may not touch it, or very close to it. That's what I meant by on or near the moving average 200. You understand what is taking place. You are a smart area wave trader. You see it, you buy it here, but you know that it's not going to go far. You will draw the 50% Fibonacci retracement level of the first part of the zigzag pattern. At least you may decide to take profit there straight away and let other traders push it a bit higher. It's up to you. All right. So you see now that you buy. So your first target is the 50% Fibonacci retracement level of the first part of the zigzag pattern. Okay. It's a bit too far. So if you accept my drawing, if you have any comment, put it below. It's up to you. All right. If you like this video, give us the thumbs up. If you dislike it, okay, we want to know. And then you buy it fast here because it's retesting the moving average 200. Wait for it because you are a smart area wave trader. You will expect it 1, 2, 3, 4, 5. Now you see 1, 2, 3. And then you get it come down 1, 2, 3, 4, 5, retesting the moving average 200 for the second time. Now you know that the correction has finished. The zigzag pattern is now completed, and you will be talking about a new cycle is likely to begin. Yes or no? This is how we can combine the moving average 200 and the wave principle. 1, 2, 3, 4, 5. Retest the moving average 200. Sometimes it may not retest the moving average 200. It will retest instead the moving average 100. Remember, the moving average 200 on another time frame can be equal to the moving average 100 on another time frame, can be equal to the moving average 50 on another time frame. So watch the moving average 50, moving average 100, moving average 200. But for the purpose of this video, we want to concentrate on the moving average 200. And the time frame for this strategy, the best time frame for this strategy is the monthly chart. Though you may see it on other time frame, the best time frame for this strategy is the monthly charts. If you want to big trade, like the hedge funds, like the pension fund, like the bank, like the big institution, on a monthly chart. So you can see the S&P 500 went down. This is a 5 move down. I don't want to go into wave call. Blah, 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 blah. Down, retest the moving average 200. This is a 3 move up. Correction was not finished, but all the way up here. So this is the first part of the zigzag pattern. All right. This is the second part of the zigzag pattern. And for the second time, the price retested the moving average 200. Very interesting. It did below it. Very interesting. You will see that very often. All right. If it did below it and you are bullish, wait for it to go above it. Here it is. And for the second time, it retests the moving average 200, displaying what we call a double bottom on the moving average 200. It's a bullish, a high probability bullish trade setup. A double bottom on the moving average 200. All right? And from there, traders took it. But you want to combine, okay, the wave principle, the wave patterns, especially the zigzag pattern. You'll see that, the zigzag pattern, okay, or the flat correction pattern, all right? So sometimes you may see the price for the flat correction because it's a shallow correction, 1, 2, 3, maybe retesting the moving average 50 or the moving average 30, and then 1, 2, 3 up, displaying new high or equal high, and then 1, 2, 3, 4, 5, the last part of the flat correction, retesting for this, retesting the moving average 200. Ladies and gentlemen, I don't want this video to be too long. I want you to get the message. The next thing that you need to do now is to go now and test it, okay, polish it and own it. Train and train and train until you become expert of this strategy. But as I explained to you, the hedge funds, the big institutions, are using this strategy for investment decision on the monthly charts. As you can see for the S&P 500, this is what has happened. Let's look at the Dow Jones, where I will see another example there, which I will show you again on the monthly chart for this strategy. Price was trending fast, as you can see here, was trending fast. Okay, here you see. If the market is very bullish, it may not, in the first part, may stop at the moving average 100. So be aware of the moving average 100 or the moving average 50. You want to pay attention to the internal wave of the correction. How to count waves. Go to www.24elliottwave.com or www.youtube.com/user/24elliottwaves. You want to know. So first time, pullback, is here a flat correction. Okay, it looks to me this is a flat correction because the price went up again to display a new high. If the previous trend is very, very bullish, we are likely to have a flat correction. So first time, the price may not test it. Like I show you for the first time, okay, for the S&P 500, it retested the moving average 200, went up, and then come back again to retest it. Here, it did not retest it the first time. First part of the correction did not retest it. You will see that very often for the flat correction, it will not retest the moving average 200. So 1, 2, 3, down, and then 1, 2, 3, up. Display new high, and now, here we are, 1, 2, 3, 4, 5, bringing it down, even below. We prefer it to go below it. What is happening? The market wants to know that it's truly a support level. So they push it below the moving average 200. If it's truly bullish, they will bring it back up. That's just the purpose of it, to retest the lower part of, because if orders are piled here, what did I say to you? If orders are placed somewhere, the price will go there. Now you know it. You should do it. Use it also like the smart money. Look at the volume, the trading volume here. Surge in trading volume. All right, orders were here to buy. The market makers need to get paid, and these orders need to be filled. Right here, the price went deep below. As an option trader, all right, you buy your call option and you hold on to it. You understand the internal wave, and you just wait until you get paid. But before that, you check Google Finance, check the financial, check, okay, the economy news, and combine the technical trading, the wave trading, okay, the wave principle, and, okay, the fundamentals to make excellent trading and investment decision. As you can see, this is a flat correction, bringing the price to retest the moving average 200. This is the second example again, when we combine the moving average 200 and the wave pattern. Two key wave patterns you want to remember, the flat correction and the zigzag pattern. Sometimes you see that the first part of the zigzag pattern will retest the moving of a 200 or may not retest it. And then the second pass is underway. So you can buy at different stage and sell. You can even sell here. If you are a smart trader, you know, okay. So at this point in time, you will draw for the flat correction. You will check the 138% Fibonacci extension zone of the prior trend. That's what you will do for the flat correction. Target point 138% Fibonacci extension zone. When the price displays a new high, fully in the market is a false breakout. All right, it makes sense. It's powerful and retesting it. Another example here, ladies and gentlemen, because you are my friend, I want you to understand it. Okay, I want you to understand it thoroughly. All right, I don't want to waste your time saying to you blah blah blah. Now on your side, you need to do your work. Okay, test it, own it. Say, George, I hear your blah blah blah. Now I want to own it myself. So now you start checking it. Okay, on a monthly chart. Okay, you say, okay, I want to try it on a daily chart. Okay, see how it works for you. Is it better to start from the monthly chart? One can even day trade from this point onward. As the price in this zone, you start giving priority to bullish signal, yes or no? All right, where is the price? You want to know price here, priority to sell signal 138%, a flat correction. Giving priority to sell signal as a day trader using TSTW24, you are always on the first best time frame, focusing only on the bearish signal. If it's a bearish setup, you are focusing on the bullish setup. You are always drawing your channel on the first best time frame. Very important. Draw your channel. Don't violate the market patterns. Okay. Let's look at the Nasdaq 100, another financial instrument. As I told you, this strategy is valid for stock, for commodity, for futures, for indices, for ETF, and okay, we can apply it okay on any time frame or any financial instrument. All right. Okay. Moment, please. Just to drink something and also waiting for my chart. The Nasdaq 100, here it is. We want to see what's happening to the Nasdaq 100, whether this strategy is also applicable to the Nasdaq 100. So far, we are on a monthly chart. You may say to me, George, I'm a day trader. You can switch from a monthly chart to the lower time frame, break it down for day trading purposes. Again, here we have for the Nasdaq 100, is almost total retracement. Can you see here? Almost total retracement. The trend that has started here all the way up here, it was a total retracement. You can see in 2000, this is the year 2000. That's where we had the tech bubbles. Okay, market was distorted to a certain degree to the highest level, so to speak, and it was total retracement. Almost total retracement. It canceled it almost. All right, almost canceled the whole trend. This is what's happened after, okay, too much distortion. But prior retesting, the moving of a 200 after a total retracement, you will look for opportunity to buy, okay? But before you will buy, you will check the fundamental. It's not because we have 100% retracement and the moving of a 200 is also there that you should just go and buy the stock, buy the currency. You will check the fundamental, you check the economy news to validate, okay, the technical setup, yes or no? All right, very important. Otherwise, you'll be going round, saying to everybody else that I'm a technical trader, and the hedge funds and the pension fund won't give a damn about you, okay? All right? Because they are moving the market. They are the big market players, and they are the one creating the cycles, the trend, and you want to know how they trade. And you want to do exactly the same thing. Otherwise, these people will mess you up big time. And you'll be saying to me, the market is rigged, blah, 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 blah. But you just want to acknowledge this market participant so you don't get into trouble. All right? I have other things running on my computer. That's why you see a bit of blah, blah, blah here. So I'm just waiting, okay? Waiting until everything is set up, okay? So the setup is very clear, all right? There was a trend, or what we call for area wave trading, the motive wave, 1, 2, 3, 4, 5, or if you don't have a motive wave itself, the motive wave is formed of 5 waves, first wave, second wave, third wave, fourth wave, and the fifth wave. That's what we call the motive wave. the trending phase of the Elliott cycle. The Elliott cycle is formed of the motive wave and the corrective phase. All right. Sometimes we have what we call a complex correction. All right. When we have a double zigzag, a triple zigzag, all right, when the correction is repeating itself. So don't be aware of the complex correction. The example that I'm giving you here is the simplest correction, okay? Zigzag, okay, flat correction, very simple. But sometimes we can have a complex correction when we have the correction is extended over time. So we need to be aware of those things. When we are applying one strategy, we don't want to forget everything else. But sometimes they want it to be in a box, okay? So this is the strategy exactly that I want to do. I want to forget everything that I learned before. I don't want to mess it up. I don't want to use the trading. I don't want it. No. Be a multi-talented trader. Be aware of everything else. Okay, you are driving. Pay attention to other drivers, the pedestrian, the weather, the condition of the road, everything else. All right. You want to have a barbecue. Okay. What people look for? They look for the weather. That's the first thing they check. So for trading also, we check the market. What is the market doing? Where are we now? The Fed about to make a decision relating to the interest rates. Okay, what's going on? So you want to be aware of the condition. You want to have your barbecue peacefully with your friend in your garden. You want to check the weather, a beautiful weather. If in your country you don't have a beautiful weather every day, you will check the weather. You don't want to be having your barbecue when it's raining, all right? And you don't have any cover, all right? You have a nice weather to have your barbecue. The same thing we want to trade, we check, okay? You want to check, okay, the balance sheet, do the Google Asset test, okay? Check the economy news, what other traders are paying attention to, okay? Is it the first week of the month? Is it the last week of the month? Is it Monday? Is it Wednesday? What's happening on Wednesday? Crude oil inventory. On Thursday, okay, the unemployment claims, okay? First Friday of the month, non-farm employment change. You want to be aware of all this. But it doesn't mean that you are trading all these informations. You are not trading them. The only thing that you are trading is the price. But you just want to be aware of it so you don't come into the market at the wrong time and also at the wrong place. All right? You want to trade, use the 5% money management rules. All right? So you don't, losing trade will happen. Sometimes, for one reason or another, other traders make your trade fail. They are not ready. Well, they are doing something else. Fibonacci aggressive traders may sell anyhow or buy anyhow at 50%, at 61.8. They may mess up your trade. So you want to be aware of other traders, what they are doing. Be patient until the dust has settled. And then, okay, you take it from there. Okay? For a new trader, this can be a bit too much for you, but give it a time. Just say, add one to it each day, and gently, okay? Gently, okay? So here we see 100% retracement almost for the Nasdaq 100, and now the price, okay, went up a bit, okay, and pulled back. So we may say that the first part of the correction was too much, so it went down, or you see that very often, come down fast, and then it went up again, and then for the second time, retesting the moving average 200, displaying, okay, the double bottom pattern. A double bottom pattern, a double top pattern on or near the moving average 200 are powerful. Powerful. We can use it for day trading and also for swing trading purposes. Here it is. Okay, so it come back to retest it first. If you extend this line, you'll see that it will be somewhere here, the blue line, which is the moving average 200. It went up a bit and then come back again for the second time. And from here, goodbye. Okay? You can use option trading here, okay, to stay in this trade for a long period of time. Okay, depending on your risk tolerance. It's valid for investment. You are an investor, you can buy and hold, provided that the fundamentals are sound and the market itself is at a cycle point. Okay, the market is about to start a new cycle. Also, you want to buy and hold. Okay, you check this sector, and this is very, very important. All right, I hope my computer is responding now. So I've said enough. This is about how we can combine, okay, the moving average 200 and the wave principle. I hope you have learned something from this video also, okay, and we put into use, okay, to make excellent trading, investment decisions. If you like this video, okay, give us the thumbs up If you dislike it, okay, let us know why by putting a comment below. You have any comment, put it below. If you truly like it, okay, share it on Google+, on Pinterest, on Facebook, and also on Twitter. This is about how to combine the moving average 200 and the wave principle. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS 008 traders. To summarize this video, there was a trend and then a correction is taking place. We want to pay attention to the correction, the internal wave of the correction, in relation to the moving average 200, okay, to make a timely day trading, swing trading, and investment decision. Thank you for watching, and I will speak to you very soon. Feel free to subscribe to our channel. Speak to you soon.